The economic survey tabled in the parliament today. Now, what the economic survey says, the first important thing that it has highlighted is that achieving growth might be under stress because of several issues. Implementation of GST, it's still the transitional phase that we are going through, so that might have a bit of an impact. The non-performing assets and the balance sheets of the banks, this needs to be improved to achieve the projected growth of anywhere between 6.75 to 7.5%. These are the projections. Now, the Eco Survey is saying that achieving this kind of a growth might be a little difficult. Of course, another important issue flagged by the economic survey is the stress that the fisc might see because of farm loan waiver. Remember, the number talked about is about 3 lakh crore rupees as farm loan waiver. These issues are likely to impact overall growth of the country in the current fiscal. The last fiscal's growth has been 7.1% compared to a growth of 8% in the fiscal of 2015-16. Now, moving on to inflation, the survey has said that inflationary pressure might continue to be there. It might hover around the 4% mark, something that the RBI too has mentioned in its policy review recently. Now, factors like monsoon, where we are expecting a good monsoon this year, will impact the inflation numbers. And also, the other good thing that the survey has flagged is that the fiscal deficit might go down marginally to 3.2%. Other things highlighted include that the services sector, the growth here has kind of moderated. FDI inflows picked up, but still not achieved the full potential. So all in all, a mixed bag as far as the economic survey issues are concerned. Now, moving on to another aspect, that the results of SBI has come out today. It has posted significant profits there. The results have been really good, but the shares of SBI tanked almost 4%. Now, the profits jumped 3 times to 3,032 crore rupees against 2,817 crore rupees for the first quarter, that is June quarter. It's been up. But what has happened is that the non-performing assets the percentage there has gone up significantly to 9.97% of gross advances in the June quarter, up from 6.9% in the March quarter. So concerns there may be reason why the shares of SBI, the largest lender of the country, must have taken a beating. Also on our show, we have our guest, Mr. Madan Sabnavis, the economist. He will join us and give us his views on the economic survey, just going back to what the economic survey has said and what the findings have said and what does it actually mean for the economy. Welcome, sir. Thank you so much for joining us, Mr. Sabnavis. Sir, first question to you about the growth. Do you think we are still, like, the growth numbers still are under stress, and why?
Yeah, actually, if we look at what the economic survey is saying, it hasn't really changed its stance from what was said when economic survey 1 was released. Now, there is reason to believe that the kind of a pickup which we expected in the first quarter of the year has not quite materialized. And I think with GST coming in, there could be some kind of disruption, especially for industry, where there is a lot of reconciliation which has to be done in terms of payment of taxes, as well as adjusting your inventory and your final output. So I think that's one of the reasons why the survey takes a more conservative view and has pointed out that there could be a downward bias to that particular number. But overall range has not changed. Now, we at Care Ratings feel that the growth rate will continue in the same range which we had projected earlier at 7.6 to 7.8. So we're talking of something slightly more than 7.5%, based on the premise that there is a good monsoon and there will be a pickup in industrial growth, especially during the festival and harvest season.
Sir, I would also like to quickly take this opportunity to ask you about the IIP numbers which are expected later in the day today. What are your expectations there?
In fact, we are expecting a slightly negative number, minus 0.4%. The reason being that in the month of June, we have seen a number of companies going in for selling off inventories, and they've really cut back on production. So this entire process of destocking, which one should take as being a temporary phenomenon on account of GST, would definitely push the production into the negative zone. But I think this is only, as I mentioned, an aberration. And as companies start rebuilding the inventories and they meet the demand which comes from the households in particular, as well as from industry, there should be some kind of a readjustment which takes place, and it should be back to normal maybe after 3 months or so.
So going back to few more issues related to the economic survey flagged in the survey today. So the fiscal deficit number, given the fact that RBI's dividend to the government has seen a 5-year low, the farm loan waiver stress is likely to affect the finances of the government, and of course the 7th pay commission. 3 big issues there. So what is your view? Where do you see the fiscal deficit headed to?
No, in fact, I think the news which came yesterday about the transfer of surpluses from the RBI to the government is significant, because in the past we have seen that the transfers have been in the region of around 65,000 crores. Now, for the current year, that is for 17-18, the budget had actually looked at a non-tax revenue from this particular source around 75,000 crores, which also includes dividends from public sector banks and financial institutions. Now, it does appear that with a 35,000 crores shortfall coming in from the RBI and the public sector banks unable to make up for this shortfall in any way, in fact, they themselves could be under pressure in terms of dividend payouts, there would definitely be pressure on the fiscal deficit target to be attained. I think that's again one of the reasons probably why the economic survey has cautioned that maintaining this 3.2% number could be a challenge. In fact, our own analysis shows that there could be an increase of 0.2% under ceteris paribus conditions, that is assuming that nothing else changes. But we should also remember that GST could be another disruption in terms of indirect tax collections, because one is not quite sure about how the revenue will be garnered, how much is going to be collected, and how the distribution takes place, because we need to take also the state governments into account when we're looking at the overall fiscal situation.
Thank you so much, sir, for joining us.